Hello everyone, welcome to Insights 21 into often heard less known things. Today we are here with a wonderful topic regarding key elements of a balance sheet. So firstly we will be understanding what is basically a balance sheet, and it is all related to basics of accountancy. So it adheres to the fundamental accounting equation. It's all related to the accounting equation. The accounting equation is assets equals liabilities plus equity. Equity is nothing but net worth. So balance sheet basically it unveils the details of assets, liabilities and equity of that particular organization, and this makes shareholders easy to analyze the company's financial standing. So the shareholders can easily analyze where the company stands financially, what's its financial position. So features of balance sheet are as follows. So copy of financial position at specific point of time. So at that particular time we can easily recognize and know what's the financial position of the company using the balance sheet. And presentation of assets and liabilities plus equity. This is how the basic format of balance sheet is, and it follows a format and structure, and that is a standard format and structure, and it depends on the type of balance sheet based on fundamental accounting equation. As we prior to this we discussed this, that is assets equals liabilities plus equity. This is how the balance sheet basically works. With this we can also identify certain other features of balance sheet. So the key elements are as follows. In balance sheet, in that particular format, what we can see is we can see the assets. When it comes to assets, we can see three different types of assets, that is current asset, fixed asset and intangible asset. Basically current assets are the resources or properties which are expected to be converted into cash within 1 year. So the examples are as follows. The examples include cash, short-term investments, inventory and any bills receivables. For fixed assets, the examples and the basic idea about fixed asset is it is the useful life will be exceeding 1 year for that particular asset, and the examples are plant and machinery and any other property including buildings, etc. For intangible assets, it will be like it doesn't have any physical existence, we cannot touch and feel, but it will hold a significant value to that company. For example, we can take the intellectual property and patents, trademarks, goodwills and also copyrights of that company. So now liabilities and equity. When it comes to liabilities, there are basically two types of liabilities, current liability and non-current liability. Non-current liability, that is long-term liability, current liability, short-term liability. As the name itself tells, current liabilities are the obligations or the debts that are expected to be settled within 1 year of period, while non-current are a little long-term which will exceed 1 year duration. So the examples of current liabilities are short-term loans, accounts payable and some portions of long-term loans also. When it comes to long-term or non-current liabilities, the examples are bonds payable or some tax liabilities and some lease obligations. So when it comes to equity, common stocks or retained earnings can be taken as the key elements under equity. Common stock is nothing but it represents the ownership interest in a particular company, where the shareholders in exchange of their investment are issued with shares. This is the equity. Regarding equity, common stock under equity. The retained earnings which are accumulated profits in that particular company, which are not distributed in the form of dividend, but they are retained in that particular company's accounts. So this is all about the key elements of balance sheet. We can look into the format for more clarity regarding assets, liabilities and equity and their entries. The types of balance sheet are as follows: classified balance sheet, unclassified, comparative, vertical, horizontal and consolidated. Classified balance sheet, in this we can see the assets, liabilities and equity will be classified. In unclassified balance sheet, it is contrast to classified balance sheet, where we can see the assets, liabilities and equity are not classified. In comparative balance sheet, it includes financial data of multiple periods, in which we can compare between assets, liabilities and equity between those particular periods, and the name itself suggests that is comparative balance sheet. Next, vertical balance sheet, where the format presents financial information in columnar format with assets, liabilities as well as equity in separate columns. Horizontal balance sheet is representing statements or financial position of that particular company information in a row by row format. Consolidated balance sheet is a financial statement that brings together financial information of its parent company and also subsidiary companies. So here we can unify the financial positions of both the companies together. So this is all about the informations in this particular video. We will come up with more such wonderful informations and also wonderful topics in the upcoming videos of Insights 21 into often heard less known things. So if you guys haven't subscribed to Insights 21, please do subscribe, and thanks for watching.